Welcome everyone to BDO's webinar, completely designed for professional services firms. So my name, for those who don't already know me, is Anna Jarrold, and I'm a tax partner focused on advising professional services firms in the UK. So the topics for discussion today are taxes in the UAE, and with a strong contingency of professional services firms set up in the UAE, this is an interest to many people. So for those who don't already know, BDO is the world's 5th largest accountancy network, providing auditing, advising, advisory and taxation services in over 160 countries. And some of our stats are on that page there, which always surprise people when they take a peek. And we've got 3 speakers today from the BDO team in the UAE, and I'll come back to those in a minute. So thank you very much for joining us. So we've been long-standing advisors to the sector, and our National Professional Services team is one of the largest dedicated sector teams within a UK accountancy firm. And our team has worked really closely with the team that we've got on the screen today, but much more broadly as well. We're really delighted to have them with us as our guest speakers. So through our strong sector focus, we work on a full range of clients together, whether they're boutique firms through to large international businesses, including partnerships, privately owned corporations, private equity-backed businesses, etc. So without further ado, let me introduce you to our speakers. So today we've got Brian Conn, we've got Ashish Athavale, and also Anshul Sharma. All are based in their UAE office, although I think, Brian, you're in the UK today, so you can never tell with the backgrounds. So both Brian and Ashish are partners advising on the broad taxation in the region, introducing new taxes, etc., and advising on that introduction. And Anshul is a senior manager specialising in giving transfer pricing advice. So we've got a broad range of expertise with us at the moment. So from the UK team, we've also got one of our directors, who many of you also know, Louis Keeping, and he's on hand to comment on the UK tax matters should the questions arise or the moment take us to comment as we go through it. So we've got an hour with you, and we'll be giving an overview of the taxes in the region, delving into some of the detail, and Brian will take us through that shortly. So as always, we run this webinar live, very dangerous, but we are doing it. And so we encourage you to ask questions using the Q&A feature, which is, I think it's at the top of your screen or the bottom of your screen. So we'll pick up as many questions as we can at the end, or if we can't, time doesn't permit, we'll pick up with you separately, individually. So we will finish within the hour, and I will cut us off if we're still talking. And we'll share our slides with you after the recording and within a few days. So without any more from me, over to you, Brian.
Thank you, Anna, and thank you for inviting us along to speak today. Pleasure to have the opportunity. Before we get started, I just say a few words about BDO UAE in case people haven't come across the office before, haven't dealt with us before. We've been established in the UAE for a long time, in UAE terms anyway. The firm was set up about 50 years ago, and that's really important in the UAE. So we're very much a part of the financial infrastructure. We have 6 offices, but 3 main offices in Dubai, Abu Dhabi, and Sharjah. We have about 200 staff there. We've got more like 250, 260 staff now. And we cover all of the broad range of professional services. If we just have a look at the next slide, won't dwell on it, but we deal with everything from transactions, assurance, of course, and the tax advisory side is getting bigger and bigger. When I joined in 2017, we had no tax team at all. I started that tax team, and now we have about 30 people specialising in taxes in the UAE. So won't dwell on that any longer. Let's dive into the the taxes themselves. The agenda will look at the general spread of the taxes, and in each of the taxes, what we'll do, we'll go into the details, the issues for professional services firms. Just a real overview, the taxes we have in the UAE. It all started in 2018, really on a broad scale, with the introduction of VAT. That was the first broad business tax that we had. Very low rate. It remains at a very low rate of 5%. If you're used to EU VAT or UK VAT, you will be very used to the model that we follow in the UAE. It's a very European-based model. Something to mention, economic substance regulations. We won't go into this in any great detail. It's not a tax as such, but it's linked to tax. And it's part of the OECD BEPS initiative. The UAE, because it used to be a very low tax or no tax jurisdiction, was a place where people might have moved profits to in order to avoid tax. To combat that, businesses now have to prove that they have proper substance in the UAE. They have to have people and offices and assets and actually be doing the work there. So that's really useful. It credentializes the UAE. It shows, we're not just a tax haven, we're open for business for the world. So the economic substance regulations seem a strange thing to some people, but they are quite important. Corporate tax has been the big change that started for financial periods starting on or after 1st of June last year. So most businesses in the UAE are now into their first tax year. So corporate tax has been a game changer. Alongside that, we introduced transfer pricing. So we now have transfer pricing, and Anshul will talk about that. And finally, country by country reporting, that was introduced alongside the economic substance regulations. Worth saying what we don't have. So in the box there, we don't have any real withholding tax. There's a mention there of 0% withholding tax. That came in recently, but effectively it does mean there is no withholding tax at the moment. You can move funds in and out of the country freely, which is very attractive, obviously. And we have no personal taxes, no payroll deductions of any sort. So hopefully that's not going to change anytime soon. But never say never. People used to ask me whether we were going to have corporate tax in the UAE, and I always used to say, oh no, definitely not. But anyway, it's arrived. So these things do change. That's the general outlook. Let's go into a bit more detail now. And we'll start with the corporate tax. And Ashish, I'll bring you in at this point. Can you just give us the overview of the corporate tax?
Sure, Brian. Thank you so much to set the context of the webinar for the day. As we come to the corporate tax, and we call it the talk of the town, how this started was that there was a federal decree law back in the December of 2020, which is now supported by various cabinet decisions and ministerial decisions, which give us the detailing of the law. So from a legislation side, the law has gone live for the financial year starting on or after 1st June 2023, but driven mainly by the start of the financial year. Most of our clients in the professional services field follow a financial year of maybe starting 1st April or 1st June. So the go live date for these clients is, of course, the 1st of April 2024. or maybe the 1st or the June or July. So it is driven mainly by the financial years. The rate is a 9% rate. A 9% rate of the corporate tax applies on the taxable profits, which are going to be determined as per the detailing given in the law and followed by the decisions. There is like a threshold of 375,000 dirhams, which translates somewhere close to 100,000 US dollars. So if your profits are below that, you are not going to be subjected to tax. A comment on the 9% rate. So UAE is a part of the BIPS framework. So we are looking at a global minimum tax going live soon too. There is a public consultation on how UAE is going to look at the global minimum tax, and specifically with the thriving free zone reliefs that are there as a part of the corporate tax law. So it will be very crucial for us to watch this space as we progress. And from a broader concept size, corporate tax on the ground works pretty much similar to most of the mature jurisdictions where it has been functioning thus far. The basis for the purpose of coming to corporate tax is going to be profits or the losses which you are going to determine in your financial statements, which are from a UAE perspective built as per IFRS, and then we come to the taxable profit or loss. This is the broad overview of how the corporate tax is going to look. Specifically from a professional services firm, I would like to make a comment that when it specifically comes to a corporate tax, we need to look at what kind of a legal or regulatory setup do the professional services firms have. If you can see the slide, there's like a bifurcation that whether it is a resident or a non-resident, or whether that setup qualifies as a natural person also. So what we have seen in most of our clients from a UAE side is that the setup in the UAE is by way of a branch. The branch could be that of a foreign limited liability partnership. So when we are going to look at corporate tax focused from the UAE, it will be very crucial for us to know that what kind of a setup you have. And UAE, for that matter, from a regulatory or a legal side, works in a very complicated manner because we don't have a central Ministry of Commerce per se, which has a uniformity in your legal type. UAE is driven by various licensing bodies, which could be one of the free zones, or it could be one of the bodies in the mainland, and they have their unique style of giving a license for you to do the business. So looking at the legal type on the license is a very crucial starting point when you're going to look at the corporate tax from UAE side, Brian, if that makes sense.
Yeah, that's great. And just to mention a couple of things there, although it's a corporate tax, it does apply to the businesses carried on by individuals as well. It's not an income tax, it's not a personal tax, but if an individual carries out a business, then they can be taxed on that business under the corporate tax. Though, as Ashish says, slightly different rules in that they don't start paying the tax until their turnover exceeds 1 million. So it's a slightly different approach. But if we look at the next slide, one of the big hot topics that we have to talk about when it comes to corporate tax is the free zones. This is probably the thing that most people ask us about when we start the conversations on corporate tax, because when corporate tax was announced in the UAE, there was a promise that the free zones would get special treatment. Now, if you're not familiar with the free zones, there are about 40 free zones in the UAE. And they've been areas in the past where foreign businesses could set up businesses that were wholly owned by foreign nationals. And there were lots of trading advantages. Some of the free zones are areas where they're effectively tax-free zones where goods can come in and out of the country without VAT and customs duty being paid. So they have lots of advantages. And one of the advantages that for many years there's been a promise that they would have no taxes for 50 years. So when the corporate tax came in, there was a promise that this would all be respected and there would be a special relief for the free zones. Now, what has happened in practice is that we do have some reliefs for the free zones, but it is very limited. So if we have an entity set up in the free zone, potentially it could be paying tax at 0%, but lots of conditions. 6 main conditions to the left of the slide there. They've got to have substance, they've got to have qualifying activity. The most important one there is the qualifying activity, because there is a list of activities that are eligible for the relief, and it's quite a limited list. We don't really have time to go into it in any great detail, but as a broad rule, professional services organisations don't fit into any of the reliefs. Most of the reliefs are around things like moving goods in and out of the country. It's not really designed for the professional services industry, and therefore, even if you've got a free zone entity, you probably won't get free zone relief. Now, there are some areas you can work around it. There's something for headquarters services. So, possibly if you had a headquarters body in the free zone, you might get the relief. But generally speaking, it's very difficult to qualify. We have a de minimis limit. So if you have a mix of things, you only get the relief if a very small amount of your income is from non-qualifying activities. So it's a tough relief to get, very tough for professional services organisations. And if you don't qualify, then you don't qualify for the current year and the next 4 years. So, once you fail to qualify, it's kind of written off. So, like I say, there was a lot of excitement that free zones were going to be the place to be and they'd all be tax-free. It's not as straightforward as that at all. That's very high level. We can look at that in more detail if anybody wants to later on, or if there's any questions there. And Ashish, anything else you want to say on the free zones?
Not really, Brian. Just one comment from my side. This free zone was a little bit of a surprise, as you said, that when we saw that corporate tax law came out, we all believed that if there were services provided by the professional services firm outside of the UAE from the free zones, potentially this will get the relief, or this part of the income will get the relief, and it will fill within the purview of the qualifying activities. But unfortunately, how the law has progressed over a period of time, and how we see it at this point of time, the bucketing is that whatever is to the UAE mainland and whatever is to the outside of the UAE is in one bucket, and whatever is free zone to free zone is in one bucket. And when you look at those activities, the condition number 2 that we see on the screen, when you are dealing with mainland or outside of the UAE, you should be having qualifying activities. Unfortunately, none of the services, for that matter, services of BDO also do not fall over there. And services part is very limited. So I would say that it is a bit of a surprise, for most of our clients who have kind of done the setup in the free zones. with kind of a commitment given on the corporate tax front not been applicable, but now the federal decree law has kind of superseded all of that, and means I would say that 90% of our clients are falling outside of the free zone relief. Means nowadays I get very surprised and review a report with much more diligence if we are saying that the free zone relief is available. So that is how the turn of events have been there. It started with December of 2022, and now we are in 24, where we have significant amount of clarity on how the free zone relief is going to operate for corporate tax. Thus, as you would know, that the guide which provides the more clarity on the practical instances is yet to be published around a free zone. So while there could be a relief on headquarter services, but in a professional services setup, which is most likely a branch of a foreign LLP, whether the branch may qualify as a headquarter remains as a debatable area. So we are really waiting for that free zone guide to be out before any conclusive view can be taken on the basis of free zone relief. And it remains a very crucial aspect, as you can see on the screen, that once you opt out of the free zone relief, it stays with you for a period of next 4 years. So it is that year plus the next 4 years, and then you cannot opt in even if you want to move around or do some amount of a structuring to be in a position to claim the relief. So a very significant area for all our clients. And Brian, as you rightly said, most of the professional services firms don't qualify for this relief.
And I guess just quickly just add into that, I guess where you're operating as a branch of a UK LLP and obviously you're not qualifying for free zone by the sounds of it, the majority of your activities, we will look to claim a credit in the UK for that for the UAE corporate tax regardless anyway. So bit of an admin point as well.
Yeah, absolutely. And one of the things Ashish mentioned there, which I think is a general comment for the corporate tax at the moment, we're still waiting for the guidance on the free zone relief. There's a number of other areas where we still haven't had full guidance. And as you can imagine, it's a very, very new tax. So there are no precedents. There's been very little discussion with the tax authorities. So a lot of these issues, they will develop over the next year, 2 years, and going forward. Anyway, let's move away from the free zones for now to the next slide and get into some of the more detailed side of things for professional services and the sorts of structures, because it's important that the type of structures that are being used and to an extent the way those structures are taxed in the organization's home country. I mean, from the starting point is really, in UAE we have a different approach for incorporated and unincorporated partnerships. Basically, the incorporated partnerships are taxed the same as any other business, in the same way that Ashish outlined at the start, whereas unincorporated partnerships are essentially tax transparent, so you look through to the individual partners, and that can lead to obviously a very different result from the tax point of view. There is the option to opt to be treated as a normal corporate partnership, if that's better. Though in many cases it will be better to take the look through. Ashish, do you want to pick up and talk about some of the things we've seen, and in particular, of course, the point for foreign partnerships and professional services organisations operating in the UAE?
Certainly, Brian. Thank you so much for this. See, from a UAE perspective, going back to the legal and the regulatory part, okay, if your license says that you are a branch of a foreign limited liability partnership, for you to be evaluating the UAE side of the corporate tax, you first need to look about how you will be treated from a UK perspective. If you are a transparent partnership from a UK perspective, then the UAE branch also qualifies as an unincorporated partnership. And then you may have an option from a UAE perspective whether to be taxed as the natural persons, as the partners of the UK firm, or whether the partners would like to nominate the UK firm by way of a branch to be subjected to tax in the UAE. And in most of the cases, the latter will be true. But what I would like to significantly highlight over here, and which Brian started this slide with, is that there is an option that the partners could also be taxed, and the partners being natural persons, there is a need to distinguish from a UAE perspective that which are the actual equity partners of the UK firm, okay, means actually on the incorporation documents, and who could qualify from a UAE perspective as the salaried partners. Because if you could see the slide, the part below, there are certain disallowances, whereas there are certain beneficial allowances as well. When we are going to look out at the payout to the partners, which could be in the form of a salary, it could be in the form of a profit share or a return on capital. So depending upon the legal status of the partner, both from the UK as well as from the UAE perspective, this needs to be evaluated. Because what we all need to be clearly aware about, that UAE is a highly regulated jurisdiction, even from an employment perspective. So even if the person works with the UAE branch, that person is most likely going to have a visa which will be sponsored on the license issued to the UAE branch. So for all legal purposes, the partner may still qualify as an employee of the UAE branch. So depending upon the status of the partner, we will have to determine what kind of a payout it is, and whether that kind of a payout will be claimed as a deduction when you are going to determine the profitability of the UAE branch. So this is something very unique to the professional services sector that we have seen till date. And we will have to see that how this story evolves. A relevant point to note over there is that the payout to the partners, if they are going to qualify the partners in the true sense of the UAE business, then there is a concept called as a connected person, which is driven by the concept of transfer pricing. So I will leave that to my colleague to be spoken about at the later part of the session. But you need to certainly have a tab on what kind of a legal setup you have, and specifically going to the partners, whether they have the visa on ground, or whether they travel to the UAE on site. Depending upon that, the profitability of the UAE branch will be determined and subjected to tax.
Thanks, Ashish. This is it is quite a complex little process, isn't it? And it's something we work through with a number of our clients already. Again, it's one of these where we don't have too much guidance yet from the authorities, and I think there's some practices that will develop as time goes on. Ashish there mentioned deductions. I think the next slide, I think we have we expand on that a little bit. Just running through the way in which the individual partners might be taxed, and the deductions that it might be possible to claim. Ashish has already covered most of this, or started it, but Ashish, is there anything specifically on the slide that you want to expand on there?
Not really, Brian. Just one point on the procedural aspect. If your business is operating in the UAE by way of a branch of a UK LLP, and the UK LLP is transparent, then you might have an option to be taxed as the natural partners, the individuals, or to nominate to tax the UK LLP by way of the branch. Now, these procedures are thus far evolving. how they will, pan out from the procedural side and more so on the portal side is very important for us to see. A minor comment over there, going back to the legal setup, okay, where I mentioned that the UAE branch has a license. What we have seen that our professional services clients could be based in Dubai and Abu Dhabi. They could be based in two separate free zones. So from a regulatory perspective, they have two different licenses. Okay, but from a corporate tax side, the registration ideally would be given to the UK LLP and not individually to the branch. This is what it looks like from the reading of the law. However, how this evolves on the portal and how do we actually get a registration and make that nomination for the partnership to be taxed, I would say it's thus far an evolving story.
Yeah, and Ashish there mentioned the portal. This is the Federal Tax Authority portal, where it's necessary, first of all, for either the partners or the branch or whatever entity is being registered to obtain the registration. That's where the exchange of information happens. We have deadlines now, don't we, Ashish, for corporate tax registration. This is fairly new, and people are in the process. Is the portal fully open for all of these types of registration at the moment?
Well, the short answer to that, Brian, is that it's developing as we, have this session. The reason is that, specifically from a branch, a kind of a setup, there is a little bit of an anomaly there, because, the publication says that you need to go by the day and the month of the license, and then there are certain dates before which you need to make application for the registration. Okay, but in a specific branch kind of a setup, from a corporate tax perspective, you are a non-resident. Okay, so recommendation to all our clients is that while you may have that leeway to go by the day and the month of the license, and your due date may transcase till the month of December, but as you are seen as a non-resident, because you are a branch, we recommend our clients not to wait for the last date. The first due date before which you need to make an application is the 31st of May. Okay, and just to share with you on a practical front, Brian, we are facing a lot of challenges on the portal. Okay, because the Imara tax portal is being updated about a year back. It has been used for VAT and excise tax, which they have now retrofitted for corporate tax. And there are, all challenges right from the entity type, right from what kind of business you are in, right from the authorized signatory. So what we have seen is that before you actually make an application for corporate tax, in 75% of the cases, you need to make an amendment from a VAT perspective. If that all is updated, then only you can proceed to make an application for corporate tax registration. And initially, the due dates were not very stringent. But now we have got these are decisions. So our recommendation to all our clients is to not to wait as per the due date given by way of the decision, but to make an application before 31st of May if you have figured out on the portal.
Thanks, Ashish. And I think that's a really important point. It's a very practical issue. Actually getting registered for corporate tax is really important. We do have the deadlines, but it's not necessarily as straightforward as it should be. And particularly it's not for international professional services firms. So if anybody's running into problems with the registration or they're not sure, let us know, because we have lots of experience from the days of VAT, particularly when the portal first opened. If you get the registration wrong in the first place, the problems can drag on for a very long time. So it's not a technical point, it's a very practical thing. Finding your way through the portal and the registration process is not always easy. So if anybody's having problems with that or wants some help with that, just let us know, because we've got a lot of experience of trying to make it work. If we move on next, and we'll bring in onshore, because Ashish mentioned transfer pricing. As I said at the top of the presentation, transfer pricing was introduced alongside corporate tax. It's very important, and there are some twists that are particularly important for the professional services sector. So onshore, do you want to just give us an outline of transfer pricing and the issues?
Sure, Brian. Thank you so much. And thanks for giving an overview of the transfer pricing. And as rightly mentioned by Brian, along with the corporate tax, transfer pricing rules and regulation are also introduced in the UAE after 1st June 2023. So going by that virtue, the transfer pricing rules in the UAE provides that any transactions between the related parties needs to comply with the transfer pricing rules and adhere to the arm's length principle. Now, in the context of, say, partnership firms, any transaction between the partnership as well as the branches that they have needs to be undertaken at an arm's length price. But along with that, the UAE regulations also came up with another concept, which is connected person, which Ashish briefly touched upon. Now, when we say connected person, it is very much relevant from a UAE perspective, as it provides that if there is any kind of payment or benefit which has been given or extended to the connected person, then that needs to be aligned with the transfer pricing rules, or per se needs to be undertaken at an arm's length value. Now, first, we need to understand what do we actually mean by the connected persons. So the UAE transfer pricing rules has provided a definition which provides that the owners of the taxable person or the directors, or to say in the context of professional services firm, would be the partners, as well as any key personnel of the company and their related parties, would fall under the connected person regime, and any transaction or benefit or payment being given to them would need to be comply with the transfer pricing rules. Now, just to take an example, if there's a loan which is being provided by any of the partners to the partnership firm, then the payment of interest which is being made by the partnership firm to that particular partner needs to be seen whether that is being done actually for the purpose of business. That is one. Secondly, that needs to comply with the arm's length rule. Only then that particular interest payment will be allowed as a deduction to the partnership firm. But yes, at the same time, as rightly mentioned by Ashish, we first have to look into the legality of what kind of partnership role they have. But yes, again, if that has been satisfied, then we have to see whether that partnership firm is a transparent or an opaque. And based on that, the same would be again taxed in the hands of the partners as well. Similar to that, we have other criteria of payment, which could be salary, or which could be a service which has been provided by the partners apart from their role, which has been done as a partner in that partnership firm. So all these things needs to be taken into consideration when these payments are being made, or any kind of these benefits being extended to any of these connected person which are being provided in the UAE regulations.
Apart from that, can I just say,
yes, Brian.
Just to clarify, so, and what this is saying is, it's not just equity partners, salary partners as well are connected persons. So it's actually quite a wide, and indeed other key personnel, other upper managers within the organization. So it's quite a wide definition, isn't it, of connected persons?
Yes, absolutely. It's quite a wide definition if we see. And apart from that, they also say that and related parties of these individuals. And if we go by that context, then the related parties definition includes people till 4th degree of kinship. So it is not just restricted to that person who's there, but if that person has a relative till the 4th degree of kinship, which includes great-great-grandparents, and those are working in that firm, that too would be taken into the ambit of transfer pricing. So that is something that is very unique and needs to be seen.
Yeah, indeed. Whether grandparents are likely to be an issue for our class, I don't know, but it's always possible.
Correct. So moving from that perspective, apart from that, the entire rules and regulation which are there are completely based on the OECD model, which provides the methodologies which needs to be followed, how the tested parties need to be analyzed, and all those things. So that pretty much is aligned with the OECD guidelines, which are prevalent in almost all the jurisdictions across the globe. Apart from that, there are certain compliance regulations as well, which are being provided by the UAE law, which states that the TP disclosure form, or what we call as the transfer pricing return in almost all the jurisdictions, that needs to be filed every single year, which will have the details of the transaction which are being undertaken by the entity or the firm, the transaction amount, the related parties which are involved in those transactions, and the methodology or the method which is being used to determine the arm's length price of that particular transaction. That is in respect of the transfer pricing disclosure form. Apart from that, there are other requirements in terms of local file as well as the master file. Now, similar to the threshold of the corporate tax, which Ashish touched upon, which is 375,000, there is a threshold which has been prescribed for maintenance of local and master file, which states that if the entity as a standalone has a revenue of more than 200,000 AED, 2 million AED, then in that scenario, the entity is required to prepare and maintain both local and master file. But if this particular threshold is not breached, but it is a part of a global group, and the consolidated revenue of the group exceeds 3.15 billion AED, then also that entity is required to maintain both local and master file. So when we are looking from a compliance perspective, it is very much required to see both the conditions at the same time to make sure that none of these conditions is missed anyhow. Because if any of these conditions is missed, then we might expose the company to a risk exposure. So that is in respect of the compliance from a UAE transfer pricing perspective.
Thanks, Anshul. I mean, this is a subject, obviously, transfer pricing is becoming one of the biggest issues around the globe. But it's going to be very, very important in the UAE, particularly with this twist around connected persons. And Anshul and I have spoken at huge length in the past about how on earth you try to benchmark some of the transactions with connected persons. It's easy if you're talking about commercial transactions with related parties, but it becomes much more difficult with individuals. So that's a very quick roundup, but transfer pricing is definitely going to be an important thing going forward. Let's move on quite quickly because we really must talk about VAT before we get on to a few questions. VAT, as I mentioned earlier, was the first tax that came along on a broad scale for businesses in the UAE. It is very, very similar to the UK or European model, and most of the terminology is the same. So we have output tax, we have input tax. What is the one saving grace? The rates are very low. The standard rate is 5%, and then we have some zero rates and some exemptions. And actually, even the zero rates and exemptions are very similar to the zero rates and exemptions that you will find in Europe. They're not exactly the same, but they're very, very similar. We have a registration threshold of 375,000 dirhams, which is about 100,000 US dollars. Once that's exceeded, or once you know that's going to be exceeded, you have to register, and then you submit returns on a quarterly or monthly basis. Now, I'm sure most of the people listening in, if they've got businesses in the UAE already VAT registered, probably familiar with most of that as background, but we do have a few areas where we see consistently some issues with professional services organisations. The first doesn't cause too much of a problem in that most people understand it, but the reverse charge mechanism. It's very important. Services bought in from overseas are subject to a reverse charge. So they have to, the UAE organisation has to self-account for the tax. They can get a deduction of the input tax provided it relates to taxable supplies. But of course, charges internationally are very common with professional services organisations. So there's lots of reverse charges to be picked up. And it is very important that they're picked up, even if the net result is nil. You're still potentially liable to penalties and issues with the FTA if you're not dealing with the reverse charge properly. So it's an important one. The area that we particularly find issues on is with zero rating of services provided from UAE to clients outside. And if we look at the next slide, we just summarise the rules generally. But I'll ask Ashish if you want to pick up this whole point about zero rating of export of services.
Sure, Brian, and I'll be quick. I know that we may overshoot the time as well. So mainly on the zero rating front, why do we have a slide on this specifically? The reasons are two. The first one is that the VAT law is now kind of substantially settled. Okay, so the government is very keen to do audits. So we have seen that almost 90% of our clients are now being subjected to some kind of an audit from a VAT perspective. And the second point is that this zero rating is a subjective concept because it is driven by the physical presence or the representative of the recipient of service if he or she is physically present in the UAE. And supporting that, there is very limited guidance in terms of public clarifications, and given the jurisdiction is where we are in, there is very limited guidance on overall judgments or jurisdictional support that we can get by way of decisions of the courts or advanced authorities. So basis that this has been subjected to various kind of scrutinies. Okay, and you need to kind of have like a decision tree and go by the most conservative way when it comes to the zero rating. Just to give you an example, that if you're a professional services firm based in the UAE, the branch is providing services to a UK-based insurance company, say, and they, you are supposed to liaise with an MGA, managing general agent, who could be located in one of the free zones in the UAE. Now, there is a huge debate around this, that whether the presence has been created for the UK insurance company and whether the beneficial recipient of this service is actually within the UAE, and that is why a 5% VAT should apply. So with the limited guidance from the law or the guides and no judgments being made publicly available, this is a very key area that the professional services firms, including that of BDO, we have a separate team who takes care of this. If we are providing services to overseas client, there's a complete judgment note or a decision tree that we have, that whether our services should be 0% or 5%, Brian.
Yeah, and I think Ashish used the words there, it's a conservative or cautious approach with this, and I think that's really important. The rules here are not dissimilar to the UK, where if you're providing services to somebody overseas, the starting point is there's no VAT. Okay, but there are lots of conditions, and there's all these questions about where the ultimate recipient is. And what I would say is that having dealt with a similar relief from the UK and in Europe. In Europe, it's much clearer and easier to get the relief than in UAE. And I think that a lot of people in the UAE do take a very cautious approach to this, and will tend to charge VAT rather than not, because there are so many conditions that have to be met. So although on the face of it, it does look very similar to what you might expect in the UK or elsewhere in Europe, it's not quite as straightforward. So Ashish is absolutely right to suggest caution with this. We know that the UAE tax authority, the FTA, takes quite a strict approach to it. At the moment, like I say, it's 5%. Perhaps it doesn't make too much of a problem. If the rate went up, I think we would have a lot of issues around this and disputes. So it's certainly an area that does exercise the professional services sector quite a bit. So
yeah, some a few comments on that, Brian. You did mention on the rate. So as we would know that the VAT came to the UAE on a GCC-wide framework. So, 4 out of the 6 countries have a VAT now, 2 of them don't. And out of the 4, we have seen divergent rates. So if we have seen at Saudi Arabia now, it is at 15% VAT. We are looking at Kingdom of Bahrain, which is at 10%. UAE and Oman are at 5%. So once the wave of maybe the corporate tax settles down, there could be movement around having a higher VAT rate, and similar to that of Saudi Arabia in the region. The UAE government is also looking at implementing e-invoicing, as it is there in most of the jurisdictions in Europe and also in the GCC for Saudi Arabia.
Yeah, I think we're very lucky with the 5% rate. We just make the most of it while we can, because it seems we're very, very lucky at the moment. It's quite a benevolent sort of rate. So long may it continue. If we just move on to I think, which is probably the last slide, and we won't say very much about economic substance. I think I probably said all of it at the start. It's one of those things. It's a very, very important reporting obligation. There's 2 obligations. Firstly, you have to make a notification early in the year as to whether or not you're in the scope. If you are in the scope, you have to make a more detailed report later in the year. It's important that these filings are done, because the ultimate sanction is that you can lose your trade license. There's some very heavy financial penalties, but you can actually be prevented from trading if you don't comply with the ESR. So, it's just a bit of reporting, you might say, but it's actually really, really important. So won't say any more on it, but we can move, I think, if we've got time, for any questions.
Right, lovely. Thank you very much, Brian and Ashish and Anshul, and Louis, you interjected there as well. So a couple of questions. We've only got a couple of minutes, so we do always close on time. So if you can bear that in mind in your answers.
Yeah.
So, I mean, you talked quite a lot about the introduction of different taxes over quite a short period, actually, in the region. And Ashish, you were talking there about the different kingdoms, etc., that will look to introduce different things as well. So, I know really you might all have completely different views on this because it's crystal ball time. But what do you think about taxes for the region going forward? Is there any indication of what is this direction of travel going to continue, or is it going to be stopped here? What do you think?
I'll be very quick, and then the other guys can have a go. I think we're going to see more taxation. I don't personally think we'll see personal tax in UAE for a long time, but I can see that the rates, particularly on the VAT, might go up. BEPS is becoming ever more important, so top-up taxes and minimum global tax rates, they will come in. I have very little doubt. And Ashish mentioned e-invoicing, which is spreading across the region. So I think that's going to be very important as well. So Anshul, sorry, Ashish, Anshul, any thoughts from you?
Yes,
That's
Brian.
right,
So,
Brian. While I make a note of the comment that we will not see a personal income tax, but as I would have already told you that if I look at the neighboring jurisdiction Oman, there has already been a consultation around the implementation of personal income tax. So just to answer Anna's question, the region is pretty dynamic when it comes to the taxes. We have been seeing newer versions on the taxes as we go ahead. In addition to VAT corporate tax, there is a concept called as excise tax as well, which depending upon the GCC jurisdictions differ on the quantity and in terms of the rate, because the rate ranges from a 50% to the 100% on the retail price. It is mainly applicable on sin goods. So the region is pretty dynamic, and we don't know which kind of a tax we will see going forward. So it's just a wait and watch.
I'm the optimist when it comes to personal taxes. I'm ever the optimist.
Certainly. Have to be.
Yeah, exactly. And Sean, was there anything that you wanted to add to that?
yes, so I rightly agree with both Brian and Ashish that considering how the UAE jurisdiction is evolving, and we have seen like every single day we have any or the other cabinet or ministerial decision coming our way, just to be sure that we don't miss anything. And considering very recently we had a public consultation document on BEPS as well. So considering those facts, it's very likely that in the near future, we're gonna see the UTPR or QDMTD or any other kind of taxes coming our way, which needs to be complied with.
Yeah, and there's a lot to take on and organise yourselves for in order to handle all of that if you're an organisation operating in the region. And so connected to that, Brian, you mentioned that guidelines have not been publicised for lots of things, and you were talking about the corporation tax position and the filings that need to be made. But if you file on one basis, then you're not allowed to change it for another 4 years after that. If the guidelines are raised and it seems that actually you didn't need to do something and you've filed incorrectly, is there an opportunity to address the filings?
And there is a process, a fairly well set out process that comes from VAT for disclosing errors, and it's the right way to do it, and that's very well set out. We're expecting something very similar for corporate tax. As yet, we don't actually even have the corporate tax return, so we don't know exactly what the filing will look like. But I would expect some sort of voluntary disclosure process to be there. And when I say there's not a lot of guidance, the FTA is doing a good job getting the guidance out, but it really is simply just so new. There's so many questions that appear that will need to be answered. So there will need to be, I'm sure, some corrections of what people do in the first stages.
Yeah. Okay, thank you. Now, I think we're just at time. So, I could go on for ages and ask you lots of questions, but we'll leave it there. So thank you so much to all of you. There's been, a really good overview, but with the detail given there. So if any of our listeners do want to get in touch with any of us, then please do drop us a note. We'll make sure that you get in touch with the right individuals or speak to people directly. So thank you again. Thank you to everybody that's listened to us today. And we will circulate the slides and the recording, as I said, within a few days. I hope everybody has a lovely day.
Thanks, Anna. It's been a pleasure.
Thank you very much.
Bye.
Bye-bye.